It's about that time of day again. My name is Joseph. Wednesday evening, September 19th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan tonight is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm going to cover crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish with a strong run higher, but testing last week's high isn't exactly a great spot to start buying. So I'm waiting for a pullback, and I've got my eyes on a key reversal line down for support tomorrow morning. The S&P is bullish with a range here tonight, so I'm continuing to look for buying opportunities, and I've got my eyes on that same battle zone, but now we have a hidden channel to look for on the S&P for tomorrow. Nasdaq is also bullish with a 1-2-3 reversal pattern, so I'm waiting to get long off a pullback, and I've got my eyes on a hidden channel on the Nasdaq as well. Gold is bullish with a spike and range pattern tonight, and that tells me to look for buying opportunities at support levels, and I've got my eye on the low of a channel tomorrow morning. The euro is bullish with a trading range tonight, and that tells me to look for buying opportunities using seller failures and that 2-try rule. Well, we've got some strong trends, some lazy ranges, and of course, no matter what, plenty of reliable trading opportunities setting up for Thursday's trading session. But before we get into the charts tonight, before we put the whole plan together for tomorrow morning, I need to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of the video. If you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing. And when you do, make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. This is where all the action happens every day. And make sure you join our mailing list. Give me your name and your email address. Promise never any spam right to your inbox. I'm only going to send you the good stuff. Every time I publish something new, I'll send you an email. That way you never miss a beat here at SOT. Also, if you're hanging out on social media, lower left-hand corner, Stock, Twitch, Twitter, Facebook, LinkedIn, I'm publishing on social media throughout the week, and you won't find that stuff on any other of my channels. So follow me if you're hanging out on socials in the lower left-hand corner. Grab all the charts from tonight's video. How nice is that? How easy is that? All the charts from tonight's video, you can have those on your computer ready for tomorrow. Just follow that link below the video tonight and grab those charts for tomorrow. And speaking of tomorrow, we got one more day left this week for our free pass. We do our free pass Monday through Thursday. And of course, you can grab that free pass if you're not a member here at School of Trade and you'd like to see what it feels like to be in our trade room, learn the strategy, see all the patterns, right? You'll definitely love that free pass. It'll take me up on that offer. There's only one more day this week, so don't miss your opportunity. Grab that free pass in the upper right-hand corner. All right, guys? Good to see you guys back here with me once again. Happy Wednesday to you. Good day today. Been a great week so far. Quad witching week, but as I always say, right? We're only as good as our next trades. Let's dig in. Let's roll those sleeves up, and let's see what we have here for tomorrow morning. Boy, oh boy, finally getting some big news here on the schedule for tomorrow. Tomorrow's Thursday, September the 20th. We have a peppering of news, starting off with the jobless claims report and, of course, that Philly Fed Business Outlook survey. Those are the big news reports, right, coming in at 8:30 Eastern time. And then they got that existing home sales number, right, at 10 a.m., right? Now, we saw a nice, strong housing starts today at 8:30 Eastern time. And, of course, right, we saw what happened on the E-minis with that housing starts number. We talked about that last night, right? Tomorrow morning, we've got more home sales data tomorrow at 10 a.m. Eastern time. This will be another opportunity to catch some big moves, this time a little bit later in the morning, right around that 10 o'clock Eastern time. So 10 o'clock is setting up to be a pretty active time tomorrow. I'm always expecting to see some volatility around 10 o'clock, period, right? Let alone when you tag on, right? You add on some existing home sales numbers tomorrow as well. So 8:30 Eastern time, I get the Philly Fed and jobless claims. right, home sales number at 10 o'clock Eastern time. And don't forget, we're going to be in our trade room 8 o'clock Eastern time tomorrow, going over all the patterns and putting the plan together. Don't forget, our trade room is a great place to come out and learn and earn every day as part of our advanced membership package. Find more about that on our website. Let's jump right in here. Got a lot to cover here tonight. It is great to have you back here with me. Thursday morning is right around the corner as we go into the end of the week. Getting that plan ready here. We got crude oil tonight, S&P, Nasdaq, gold, and euro. Starting off tonight with oil. Oil is bullish with a strong run higher, a bull channel, a measured move, and a reversal line on the chart this evening. The bull trend finished very strong. You can see just the extreme kind of exhaustive, last, kind of Hail Mary move here, right, on this way higher here, all the way up to this measured move, right, up to the measured move. And if you look left, we're all the way up, right, to those highs from early last week, right? Is that early last week or late the week before? I can't quite tell there. But all the way up to those September highs at 71.04, right? Most likely sellers were exiting any final positions as price rallied higher. So we can definitely tell we're bullish right now, and we got a pretty strong trend. And anytime I see a strong move like this, I know the odds of a two-legged pullback before a retest of the high are pretty good, right? Anytime we see a real strong move in one direction, we know the odds of a pullback and a retest of that high, if not a pullback and a second leg through the high, right, we know those odds are in our favor. So I'm waiting for a pullback, and of course I want to incorporate my entry patterns on major levels of support. So where can I find some support levels to get long here tomorrow? Well, we get a bull channel. I'm going to draw that trend line up, right? That'll be a great level of support. I've got this reversal line here, right? We saw how well reversal lines worked earlier today, up, back, and go, right? Reversal lines are very, very effective for trend following. So here's another chance, right, off of a reversal line, right, for tomorrow, right? So that reversal line is there. In all reality, really this whole area down here, I mean, you could honestly extend out. This whole area could be seen, right, as a buying area here. We really just want to see a pullback. I would say at the very least down to that 70-71, just because we're going to want to free up enough space to make sure we're not buying right into that high. Now, it's also important to remember that whenever we see this much movement in one session, the following day is likely going to go sideways in a range or into some sort of spike in channel. So we're going to be keeping an eye out for possible double tops, right? Those possible double tops. If we see double tops in the market, we look out for a range. If we keep going higher here on strength, we'll look for a spike in channel. So we've got quite a bit to plan here, right, for tomorrow. Let's put this plan together. We'll go up, we'll go down, we'll go sideways. That way we are locked and loaded. And again, my goal tonight on the newsletter is to give you guys some ideas for tomorrow. But don't forget, we'll be in our trade room at 8 o'clock Eastern time executing this strategy right elbow to elbow with all of our best clients. Let's see here. So strong move up. Nice strong move higher. I'm looking for a pullback, right? I'm looking for a pullback. I'd like to get a nice deep pullback, at least down to that 70-71 area, at least, right, get something off this high so that I can, right, look for a chance, right, to buy nice and low. Now, if you look back in time here, you'll notice, right, these pullbacks look pretty symmetrical, don't they? Right? So if I was to measure, let's just say measure that pullback, right? If I measure that pullback, yeah, pretty symmetrical, right? Those are looking pretty good. So that gives me an idea kind of where, where this area might be. Like I said, this whole area down here really could be, right, that big buy zone, right? So let's stick a support line right there. Right? Let's stick a support line right there. Let's bring that down. Let's increase that, right, battle zone a little bit. So now that we know where we're looking for that pullback now, again, kind of measuring those prior pullbacks, well, now we can expect a nice deep pullback. Now, when we pull back, we're probably going to end up back below the moving average. right? Similar to these situations we saw earlier today, right? Usually when you see a nice strong trend, you're going to get a couple deep pullbacks that will go actually below the moving average. That's where the best buying opportunities are going to come, because what's going to happen is, and you may not see this on this time frame, it's a little bit tough to see, but it was a good example right here where we pull back. We go back to the moving average. We see sellers try to sell off that moving average, and when they fail, the market rockets higher. So that's ultimately what we're looking for here tomorrow. Looking for a strong pullback, a move back to that moving average. Let that moving average attract those sellers. Let's see if we get a nice red candle coming off that moving average. Now, this is what I call a two-try pullback. One try, two try. Now at that point now, you've got all the bears, right? They're all roped into their positions now, and now we have them exactly where we want them. I know exactly where their stops are, right? If I was a seller, my stop would be right above that high, and that's where I'm looking for my first buying opportunity. First buy here will come off of what we call a two-try failure. The bears try once, the bears try twice. That basically tells me all the sellers are roped into the market, and if they fail, this price should explode going higher. And again, you can see examples of those in the last couple times we pulled back right to the moving average. You can see them back here. One try, two try, explode higher. One try, two try, right, explode higher there. So once we go higher though, I don't want to buy into that high. I don't want to buy into that resistance. So what's the best way to proceed from here? Do I just sit on hands and wait? No, you can look for a pullback. Look for a hidden channel pullback. That hidden channel is drawn off those two highs. Then we'll wait for that pullback and look to buy off of that low. So really, really simple strategy. If the market pulls back, I'm waiting for a one try, two try pullback. I'm waiting for that failure. Then don't chase after it. Look for that hidden channel pullback, because that will be, right, another easy, reliable setup as we go. Now, talking about two-legged failures, right? Two-try failures, hidden channel pullbacks, and I'm going to go over a lot more of these entry patterns tonight. And if you're here for the first time today, this might be way over your head. So I want to give you a shortcut. Rather than having to go back and watch all my videos here on my YouTube channel, and there are probably thousands at this point. I've been doing this for a long time here at School of Trade. I'm going to give you a shortcut, and that shortcut will be with a free trading course. You'll see it pop up here in the upper right-hand corner. Follow that link. I'll also link it up in the description of this YouTube video. If at any time you want to register for that course, it'll be in the description. Grab that free course. Right? Trust me, it'll be worth your time. It will. I get such great feedback from you guys on that free trading course. So join the free trading course, learn the patterns, learn the analysis, learn the strategy, and then that way you can make a lot more progress every night with me on this nightly newsletter. So that's if the market pulls back. Now, what if we keep going higher here? Well, what we really want to do is we want to anticipate a possible range here, right? We may not get the pullback. We may come out tomorrow and this market may be going sideways. If I see a double top in price, then I know we have a range-bound market. And if we do see that range, it's a bull bias, which now means I'm looking to buy below the low of that range. And I'm going to use a similar pattern, right? I'm going to use what we call a two-try failure. One try, two try, and then look to buy off of that low. So the same principle if we bought the pullback, if we go sideways, same thing. Wait for one try, wait for two tries, and then again, I'm looking to buy on that second try failure. What that will do is that'll rope in all those counter trend sellers, and when they fail, right, they make basically cannon fodder, right, for this price running higher. Now, what if it keeps going higher, right? If it keeps going higher here, you want to keep an eye out for a possible spike in channel. You know, we heard news from OPEC this morning that they were thinking of raising price targets up to that $80 a barrel area by end of the year, and that may continue to spook out these bears and let this market really rally. So if we do keep going higher here, just, right, don't chase after it. Wait to see what we get. If we get that spike in channel, now you know to wait for that pull back. I always like to look for on spiking channels trap patterns into failures into hidden channel pullbacks. That'll be a trap pattern into a failure into a hidden channel pullback, right? Again, trap into a failure into a hidden channel pullback. And again, that sequence, the trap, two try failure into hidden channel, right? Hidden channel pullback. You can see hundreds of examples of exactly what I'm describing, right? By going in and grabbing that free trading course, right? It's in the description here, right? It's also linked up in the upper right-hand corner. So that's the plan if we go up. If we go down or if we go sideways, how would the market reverse tomorrow? What does a reversal look like? Well, we have something which we call the 1, 2, 3 reversal, right? And there's an exclamation at the end of that phrase, 1, 2, 3 reversal, right? A very strong 1, 2, 3 reversal. We saw a great example of that on the Nasdaq, and we'll talk more about that in a moment. But we have to imagine though that if these bears can take back control, they're hunting for that low around that 69.10 area, right? They're hunting for that big low on that pullback. Now, how would those bears take control here? First is a strong move down. Now, a strong move down is not enough to reverse the trend because let's not forget, with this much move going higher, any pullback here right now is probably going to be seen as a buying opportunity. So if we do see a strong move down, I'm looking for that two-try rule. I'm looking for that two-try failure, and I'll look to buy into that failure going right back up to retest the high, right? Failure into hidden channel pullback going higher here. If we do continue, right? If we do continue though, if we see them 1, 2 back to the moving average and 3 through that moving average, you got to remember, right? It's going to take not just a strong move lower, not just to hold the pullback, right? But a strong move lower. That's what it takes to qualify a reversal. Because I'm telling you, you'll see lots of examples on these charts where a strong trend tries to reverse, but buyers keep buying it right back up. So once we see that reversal, then what I'll do is I'll find my new channel by drawing out my lows back up to my highs. I also like to draw a trend line off of these highs as well, right? Because it oftentimes creates this little kind of range of resistance up in there, right? And I look for a sell off of that, right? Off of that high. Okay, so again, if you want to look for a reversal, wait for the market to actually reverse with that 1, 2, 3 reversal, and then we're looking to sell right off of that high as we go hunting for those lows tomorrow. Don't forget, 8 o'clock Eastern time, we're going to trade this strategy with all of our members. I look forward to seeing you right there with me. How about some S&P? Boy, the S&P was relatively quiet today, but we continue to see great opportunities to buy the low of that range. S&P is bullish with a trading range, a hidden channel, and a measured move on the chart this evening. The trading range is a bull bias, and that tells me to look for buying opportunities at support levels below the low of the range. Bull move into the trading range. And yes, this is basically the same range that we had from last night's newsletter. Right? What does that range tell me to do? It tells me to look for, again, with that bull move up into a trading range now, it tells me to look for a buying opportunity down below the low of that range, which means I'm looking for my two-try rule. 1 try for the bears, 2 try for the bears, right? And then back up we go. 1 try. 2 try. Once I see those sellers have tried their second time here, now we know exactly where the pain comes in if they're wrong, and we're buying into those stops for a run back up to retest the high. And again, I've got hundreds of examples of those 2 try rules in my free trading course linked up in the description of this video. What else do we have here? What else do we have here? We want to find support levels, right, to buy below the low of this range, right? So here's my range. Where can I find some support levels? Well, we had that beautiful reversal line, which we talked about in last night's newsletter, and you can see everybody was loving on that here this morning. So this whole area continues to be an area of interest, but I'm also watching now a potential hidden channel here, right? This is not the greatest hidden channel in the world. In fact, it might even be a little bit tighter there as well. But really what I'm looking for is I'm looking to use that trend line. one try, two try, right? And then back up we go from there. So it's a relatively easy plan of attack here on the S&P. I want to get down, right? I want to buy off of that low using, right, that two try rule, right? So we go one try, two try, back up we go. Now, what if the market goes higher here, right? What's the plan if it goes higher? Well, you've got to remember, if I take this trading range, I copy it down, that creates support. I copy it up, and that creates resistance. I've got to really be careful buying until we can break through this area of resistance between, let's say, 22.5 to 21.5. I have a measured move, a symmetrical two-legged move, right? Symmetrical two-legged moves make for good targets for the buyers, so they become resistance. I don't want to be buying high up here, right? I want to be buying low. So what I really want to look for is, again, I'd rather be a buyer down, right, in that battle zone. I'd rather be a buyer off the support, off the low of that range. If price goes higher here, you really got to get that strong breakthrough. Once we get that strong breakthrough, then I can look, right, and confidently start buying these pullbacks, right, and we can get on with this to the upside. But again, you've really got to crack through, right, that high, because I can't tell you how many times I've seen the S&P, for that matter, right, jump up, look very, very strong, chop around, and then sure enough, right back down, right into that range. So keep an eye on, we call these range expansions, right? Expansion support, expansion resistance. We want to buy at expansion support, take our profit at expansion resistance, and if we do punch through it, right? If we do punch through that high, we can then look for that new hidden channel, right, and go buying on, right, go buying on that pullback. That will be the path of least resistance for the buyers. So that's the plan there for the S&P. Pretty simple plan there on the ES. The Nasdaq. Boy, this Nasdaq got tossed around like it was thrown in the dryer, right, and put on spin cycle today. Nasdaq is bullish with a 1, 2, 3 reversal, a bull channel, a support trend line, and a measured move on the chart this evening. The 1, 2, 3 reversal tells me that sellers are going to be getting out of their positions before their heads get chopped off, right? We got that bear market to begin the day. Right? The bears tried once, the bears tried twice, and you can see after that candle, we were done. Strong move up, pull back, and then run. That 1, 2, 3 reversal now tells all of the sellers who are still holding positions from earlier on in the session or even earlier on in the week, right? That is one big broadcast message that says, get the heck out of here while you still have some profit on those positions. And this oftentimes results in aggressive move going higher, right? Which is important because now I know that with sellers exiting their positions, we're probably not going to get a very deep pullback, right? We call these short covering rallies. When the market is bearish at first, the bears try once, the bears try twice, and they fail and we get that jump. What happens a lot of times is that moving average comes over and we barely pull back, right? We never pull back all the way to the moving average because let's not forget, these are not buyers buying up here. These are sellers buying. You know, think about that for a second. A buyer wants to buy at support. They'll stay patient to buy. But a seller who is seeing the writing on the wall, are they really going to wait to get out at some resistance? No, they're going to get the hell out, right? They're going to flatten their position. They're going to cover their short positions, right? And it's going to result in a rally. That's the reason why they call them short covering rallies, right? Those big rallies, because all it is, it's just sellers that were short back here. They're getting out, right? They're not waiting. They're not trying to time their exits here. They're getting out, right? While they still have some profit left in that move. So we could expect to see a little bit of an aggressive move here. Right? And that tells me, right, that we can be a little bit aggressive. Now, I'm not saying to chase this market higher, right? I've got this measured move kind of right overhead here. So I'm not in the business. You know me. If you watch my newsletter, you know me. I'm not in the business of chasing these markets higher, right? I'm in the business of identifying momentum, which is bullish right now, finding support, right? So I can buy that bullish momentum. And I'll tell you, there are some great support levels we have on this chart. First of all, take this 75.18. Now, what do we call these? We call them reversal lines, right? We saw one earlier on crude. Strong move up, pull back, strong move up. Oh, I love to use those prior swing highs as a level of support. So I'm watching that 75.18. I'm also watching another reversal line here at 75.10 and a quarter. So this whole area right here is just a jackpot waiting to happen. At the same time here, I'm also layering some support trend lines, right? Coming up from here, coming up from there. And boy, oh boy, this really lines up to be a hot spot here of support for buying opportunities. Now remember, I'm expecting there to be a relatively aggressive set of buyers here before we get back up to retest today's high, and then of course back up to retest Tuesday's high around 75.65. So time is definitely of the essence. What I'm looking for in these situations is traps, right? We don't want to wait for those full-blown patterns. We'll wait for those traps. So looking for a pullback, trap low into a two-try failure, that two-try failure into a bullish strength. Don't chase after it. Find that hidden channel, right? And we're looking to buy off the low of that hidden channel. So there are three potential patterns here. One is a trap low. Two is a two-try failure. And again, it will come off the moving average like that, right? And three will be that hidden channel pullback, right? Trap low into two-try failure into hidden channel pullback, all of those using, right, support levels in a bull market. And again, this little sequence, right, it happens over and over and over again, right? We see that trap low into a failure, into strength, into a pullback, right? And we're off to the races. I'm not making this stuff up, right? Stuff happens over and over and over again. And again, if you want to see hundreds of examples of those on real charts and real patterns, right? Grab that free course in the description. You can enroll, follow that link in the upper right-hand corner, right? And you can grab that course and learn more about these patterns and see how they're traded every day. So knowing that, that's if price goes lower. If price goes sideways, it probably won't, but I've seen stranger things. So if we do see double tops here, again, keep your eyes open, right? If we do see double tops here on the chart, we know we're bullish, but we know we're going range bound. If that's the case, one try, two try breakout failure. Let those bears try once, let those bears try twice, and then buy it back up. It'll look almost identical to that, right? We go down, one try, two try, right? Slicing through that moving average, right? And back up we go. What if the market keeps going higher, guys? Right? What if we keep going higher here? What if we keep going higher? If we keep going higher, nothing changes. We're still looking for that pullback failure, right, into hidden channel buy as we go. The only thing I don't want to do, right, is chase after it, because that's always where, you know what's going to happen, right? You're waiting, and then as soon as you hit the buy button, that's when the market will pull back, right? It's almost as if they're watching us, right? Almost as if they know exactly the moment where we decide to hit the market buy button, right, and buy that high. So don't take that bait. Now, it looks unlikely right now, but let's get prepared for it. How would a reversal, what would a reversal look like right here for tomorrow? Remember, we need to see strength going against this trend if we're going to give momentum back to the bears. First things first, a strong move down. Second is a pullback to that moving average. Third is a strong move off the moving average. Remember, if it was as easy as a strong move down and then pulling back to the moving average, right? We'd all be rich. Actually, we wouldn't, because there wouldn't be any money left to make, right? That's the beauty of trading, right? It's the people who have the knowledge of how these markets work, not the people who have the fancy trading software, right? Those are the ones that make the money. So one try, two try, we run, right? We run off that moving average, right? That run off the moving average, that's what makes us right now trust this bear market. Find that new hidden channel, draw off that high. Again, I like to draw off those highs, create that little resistance zone right there, and I'm looking for right, that sell off of that high. And oftentimes that sell is just simply a one try, two try, failure back down, and we're heading back down to retest that low at 74.70, 74.71, right? Give or take a few ticks. So great example there on the Nasdaq of a 1, 2, 3 reversal. Now we're waiting for the pullback. Let's keep going here. From the Nasdaq now over to the gold. Gold is bullish with a spike in range, a hidden channel, and a measured move on the chart this evening. The spike in range is bullish, telling me to look for buying opportunities using seller failures at support levels below the low of that range. Bull market into a trading range. Same thing as we're seeing right on a lot of other markets right now, mainly the S&P. We're looking to go one try, two try, right, and buy up that low. I can also see a channel on this chart as well. If I draw trend lines across those highs, it lines up nicely off of those lows. So what better place to look for a buying opportunity? Yeah, below the range and at a support level. At the same time, you can see we've got that range, the range expansions above, the range expansions below. So take that range expansion support, combine it with that trend line support. This whole area right here becomes a very tasty area here for those bulls. So the plan is pretty easy, right? Plan's pretty easy. We want to buy low. We want to avoid buying high because we know, right, if it was as easy as a strong breakout, right, we'd all be wealthy. But you know it's not that easy. Strong breakout, not so fast. Back down in. Strong breakup, not so fast. So be very careful, right, trying to buy those breakouts. So looking for, if price goes down, one try, two try, back up we go. And again, these will always look a little bit different, right? One try, two try, back up. One try, two try, back up. One try, two try, back up. We'll do more of this tomorrow in our trade room with all of our members, right? What if price goes higher? What if price goes higher? Well, again, I'm not going to fall for that typical trap of trying to buy that break higher. We're going to wait and see, can they hold that pullback? If they can hold that pullback and blast higher, well, now we know we're bullish here, right? And now we know we have a successful breakout. I'm going to find that new channel, look to buy that channel low, right? Look to buy that channel low, nice and easy as we try to finish off that one two-legged measured move up around that 12.15. Again, don't forget, if we sit in the middle, stay away from that middle, buy that low, right? Take your profit up at that high. It's a relatively easy plan of attack here on the gold. Let's wrap it up tonight now on that euro. Always love that euro. Euro is bullish with a trading range, a resistance trend line, and a measured move on the chart this evening. The trading range has a bull bias. There is a bull market, right, going into that trading range, right? We got double tops, we got bottoms, right? So we know we have, right, a bull bias. And as you can see, I mean, it's been no surprise here, right? One try, two try, back up, right? One try, two try, back up. This most recent second try, right, stalling out in the middle of that range right now. And I would imagine a lot of that is probably because of this falling, right, resistance trend line here, right? The trading range, bull bias, I want to buy off those lows. And I really want to buy as low as possible, right? Because you can see that falling resistance trend line. That's going to keep the buyers honest, right? That's going to keep the buyers from getting too aggressive, right, as it goes higher. So really what I'm looking for now is I'm trying to find some support levels. Here we go. Here's one, right? Another measured move going lower. There's two. I'm trying to find some support levels that I can look to get long here, right, off of that battle zone, so I'm not buying into, right, that falling resistance. Now, that falling resistance may also give those bears a chance now to take control as well. So here are kind of two scenarios that we're looking for here tomorrow. One will obviously be the typical one try, right, one try, two try, and then failure back in, right? Failure into hidden channel, right? Failure, hidden channel pullback, right? And then back up in again. Just make sure you're aware of where that trend line is, because you're not going to want to be buying right into that trend line. So the pattern needs to get us in as close to the low of this, right, of this range. But I'll tell you, keep an eye though, right? Because this resistance trend line, it's going to keep those buyers honest right now. We may see one try, two try, and this may run right through that battle zone. If that's the case, that becomes a breakout. We'll find that new channel, and we'll look for those sells off the high of that channel. The only concern I have here is if we don't get in, we really want to get in before we get back to that low. So if we do see this, right, if we do see this, strength, pullback, strength, or 1, 2, 3 breakout, we better hurry up on this, right, and get that, right, and get that sell here before we get down to that 17,000. Because once we get down there, it may end up stalling out here and really making our job difficult at that level of support. If that's the case, though, look for this as a range, and then a one try, two try, failure, right? So you'll see how we're using that same two try rule, that same two try failure pattern. But if we do end up back down to that 17,000 on strength, we know we're not going to be buying this anymore. It's not going to be a bull market, right? It'll be a bear market at that point, and we'll look to keep selling, right, up at resistance, right? So basically, right, it's a one try, two try back up, or it's a 1, 2, 3 reversal. Find that sell off the high and get at it quickly before we get down to 17,000. If we do see it roll lower, stall out down here, again, one try, two try, failure back down. Or don't forget, maybe it goes 1, 2, 3 reversal. Who knows, right? And then back up into that range tomorrow. So that's an option as well. Don't forget, there is a bull bias to it right now, so buying off that low, right? When it comes to selling off the high, I like to wait for the failure, then I like to grab that pullback and sell it from there, right? You might be wondering, how do you sell the high of a bull range? Right? We don't want to sell the high of a bull range by using a buyer failure. We've got to wait for that strength off the high, then grab that new channel, try to combine that, right, and sell off of the high of that range. That's the more reliable pattern than trying to sell those failures, because again, it's a bull market at that point. And then if we can get through it, right, 1, 2, 3, if we can get through the high of that range, we'll gladly keep buying these pullbacks. We've just got to get to that high. Show me some proof, 1, 2, 3 breakout style, like we said a few times already tonight on this newsletter. So guys, what's it going to be tomorrow, right? We're going to get some nice pullbacks here. Hopefully we do. I've gone over all of the plan for my favorite markets for tomorrow. Now come out and trade it with me tomorrow. We've got a great free trial here at School of Trade. You can grab that on our website. And remember, being a successful trader is all about strategy, skills, and mindset. I teach my 3-step strategy every day in my trade room. My trade room is a great place to come out and develop the skills that it takes to be successful. But I'll tell you right now, I could give this strategy to 1,000 different traders, and the majority of them would not have the mindset to be able to do it consistently. That's what separates the rookies from the pros, that trader's mindset, discipline, patience, right? Staying optimistic, trusting your patterns, and we build that discipline, patience, and trust every day together in our trade room. I'd love to see you there tomorrow morning. If you're looking for a trade room that'll make it easy to identify the best trading opportunities every day, check out my advanced classes here at School of Trade. They include everything we do as well as lifetime access to our trade room. If you have any questions, don't forget you can always call the toll-free number right next to my ugly mug on the homepage. And as always, I've got live support and I'm standing by to answer all your questions. Guys and gals, great job so far this week. We got another day tomorrow morning, 8 o'clock Eastern time. I hope to see you there with me in the trade room. We'll be trading this strategy with all of our clients. If not, come back and see us tomorrow night for our next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.